on this computer.
Leave meeting.
Leave.
I know. It's so weird now that it like alerts you that the recording is happening. I don't know. Zoom freaks me out now. But anyway, welcome to our Phoenix Weekly Huddle. So I literally just met these guys. This is one of the first times I'm gonna say that I've like met someone, did not officially do business with them and let them on the huddle. So you guys at least made a good impression at happy hour. And like Mia said, maybe we were a little too intoxicated and that's why we invited you here. But either way, I usually I started this group in January 2019, and usually every single guest that has been on, I have personally done some type of transaction with before I brought them on so I could vet them and be like, yeah, guys, you should use them. So I will just say I haven't vetted them, actually use them, but they are stand-up guys and awesome to hang out with, and have some cool products that I think would help benefit everyone in the group. So I did want to bring them on, specifically Eric and Chad. We met, Mia and I, last week. So I will let you guys introduce yourselves and introduce your team and kind of take it over from here. And I will just mute unless you need me to jump in.
Awesome. So I appreciate that. Actually, I'm a full-time Uber driver, guys. I'm just gonna pull out of the bag now. I don't know anything. I'm joking. So me personally, my name's Eric Maza. I'm actually a lender here with PRMG, Paramount Residential Mortgage Group. I've been in the mortgage industry not too long, for about 10 years, but I've been in finance for about 20 years. So which really comes in handy, especially when we're talking to borrowers that have some credit concerns or whatnot, and we're just trying to get them over that hump. But as far as mortgages, I basically came in during the countrywide Bank of America debacle, when Bank of America basically bought all the countrywide loans and was modifying, anywhere between 200 to 300 loans a month during that season. So I've definitely seen a lot of scenarios when it comes to originating, but tonight's call is really going to focus on the non-QM products that really focus on investors and multi-units, especially when it comes to figuring out exotic incomes, because our products really don't require any income.
Which one did you like?
And I've brought on my team members to really facilitate. So I'm going to bring on Chad, and then we're going to bring on our non-QM partners. So if you just want to kind of look at this from 30,000 feet, me personally, I'm the actual loan officer that's going to be working on these files. So if you have any questions, that would be your single point of contact. And then my team around me, Chad is actually my branch manager. And then Chris and Jason are actually the product specialists, if you will. So if there's a question that and so if there's a question that I can't answer or Chad can't answer, boom, we take it to the top. So a lot of good info. And basically that's the way we approach all of our loans, is as a team. So you basically have this concierge white glove approach to all of the loans that you trust us with. So with that being said, I'm going to hand it over to Chad to introduce himself, and then we'll just keep it going.
All right, my name is Chad Quinsky. I'm the area manager for Arizona for PRMG. So I've been doing mortgages for about 20 years now. But I know you don't really want to hear about me or anything like that. What you really want to know is what we're going to have Chris here, who is our partner with Home Express, which is where we broker and package these loans to. They are the investor on the deal. They are going to talk to you about DSCR loans, which is debt service credit ratio loans. These are loans that you're going to be able to do for, from what I understand, this group really likes to do Airbnbs and VRBOs and investment properties and things like that. These are the loans that we're going to be able to do for you guys without any income. So I will pass it on to Chris for that.
Hi, everybody. Thanks, Chad. Appreciate it. Again, Chris Clark, Regional Sales Manager. I've been in loan industry since 1999. A big majority of it was retail, and then wholesale as of about 4 years ago. Started as an AE, move up to Regional Sales Manager, and probably moving up to business development here shortly. One of the things I do well is know products, know how to tell you guys the truth up front. Set the right expectations to make sure we're sizing up the deals up front, right? We don't want to send you down a path to wondering if the loan's going to close. So I'm going to share my screen with you here. just go over a couple bullet points about the company and then move to some of the particulars with the DSCR product. And then we'll open up for some Q&A to make sure any live or real-time scenarios you guys have, we get your answers to hopefully tonight.
It'd be nice to get all of your web links in the chat so we can get them all added.
Yeah, and I'll send some of the slides from the presentation to Chad and Eric, and you guys can distribute to them, as you see fit there.
Thank you.
Sounds good.
All right, so first one, if any of you don't realize NonQM compared to say some of your conventional mortgages, basically the major difference is conventional mortgages are insured, right? NonQM are not insured loans. They get sold to private investors, people with big money who want to sit on these rates and payments for long periods of time. After the 2007 debacle, a lot of these investors, and you guys probably heard these horror stories, these investors ended up being homeowners, right? It was not a good time to own these properties with nobody making payments. I had borrowers who hadn't made payment in 12 years. You have courts backed up. They're paying taxes and insurance on properties over and over and over without getting any kind of income or being able to evict the person out of the property. So what's really changed in the market from then is investors these days, they want people who can make payments. Okay, and since this is a product where we're not showing any ability to or any income in order to show the ability to make the payment, we're relying on the debt service coverage ratio, okay, which is basically the point to where the mortgage payment, including the taxes and insurance, meets the rental income on the property. All right, so just to kind of give you a general idea, but Home Express, we're a top 3 wholesale non-QM lender. There's my ugly mug there. One of the things that separates us from the rest of the industry, we have a 90% approval ratio. Okay, 70% funding percentage. And this includes income files, right? So this is, I'd pretty much bet you my golf clubs almost double than any other non-QM company in the industry. Okay, the reason we are able to keep this is we ask all those hard questions up front. Okay, we do the back and forth. We have the conversations with the LOs, with you guys or the borrowers. So you'll get some of that back and forth so we can paint this nice, clear picture. We know exactly how to get the loans into the system and make sure they're going to go through smoothly without any yellow or red flags popping up there. Okay, so we'll get into some of the particulars here on the DSCR. And DSCR, if you guys aren't familiar, it's a commercial term, commercial lending term. And again, it's just dividing the rents divided by the PITI on the mortgage. So starting here, again, no income, non-owner. We do not do first-time home buyers. Okay, somebody can own a home. Let's say they own a home in Vegas. It's an investment property, right? But they live with their mom in Southern California, and they want to buy a property here in Phoenix. Okay, we're okay with that. As long as they've owned a property in the last 7 years, we'll do that loan. Okay, if they haven't, we won't accept them as a first-time home buyer. Okay, so just keep that in mind when you guys are kind of filling out your prospects there. So to start, mid-score, 600, minimum score, so pretty low score not to show income. We go up to $2 million on the loan amount. Again, no income, employment, or debt to income ratios on the 10 of 3. Qualify with rent covering. This is a key point. A lot of companies, if the DSCR coverage is less than 75% of the rents, right? Meaning the mortgage payment is 25% higher than the market rent, right? Most companies aren't going to touch that. Okay, they want that thing to cash flow, right? That's what they're gearing towards. If you have a 700 FICO, we don't care. You can have 25% rents compared to the PITI, and we'll still do it. Okay, there are some things we can do. Like I said, we can go to interest only, or we can buy the rate down to get that percentage higher up to 100 to try to increase the loan to values. Okay, give you some more borrowing power there. A big thing that we just rolled out, and I've been working with our compliance department on, are referral fees. Right? So somebody refers you the deal, boom. Have them added to the fee sheet. Eric, Chad, make sure they're added to the fee sheet as a referrer. Escrow can figure out how they get paid or socials or whatever. We don't really care. Just put the name on there and disclose it, and we're golden. I'm not really seeing that with any other companies as well. Another big one, 6 months, new rule on cash out. So if you're looking to refi the property within 6 months, we will do, as long as it fits our guidelines, we'll give you cash out. Say you bought a property cash, right? Or somebody bought a property cash. Within 6 months, if they want to take out or replenish their cash, we'll do that based on our current cash out guidelines within 6 months of them purchasing the property. Okay, no questions asked. Most companies aren't going to do that as well. After 6 months, we will allow you to get a new value, new appraised value, and take cash out on the property. Most companies are going to be a year for you to do that. That way you can drag that money out, put it into another investment, buy another property or whatever, or just maybe just replenish the cash that you use to purchase the property. We offer interest only. Our interest only is on a 480-month amortization. So what that means is the first 10 years are interest only. After that 10 years, it goes to a 30-year fixed principal interest loan. Okay, so that's good if you maybe a long-term property and you want to kind of cash flow quickly, right? But you're going to keep it long-term. That would be a good product for something like that. Short-term rentals, Airbnb, Verbo, pretty much anybody will accept. You'll close in the name of an LLC or corp. You're not required to, but you can. And I would suggest if you are investing regularly, that you do set up an LLC for most likely each one of these properties, right, for your protection. So we would just need your LLC or corp documents, preferably up front, so we can make sure the LLC or corp is in good standing and there's no issues in closing in the business name. Another big one, non-warrantable condos, right? A lot of condos properties out there are just, they don't fit HUD rules to be warrantable, right? For one reason or another, it could be occupancy issues. Maybe they have too many investors in the project. Maybe there's litigation on the property. So we will do those. We just want to have an understanding of why it's non-warrantable, so we can address that up front and make sure it's not going to be a major issue and keep us or prevent us from closing.
Chris, can you give an example of that? Because I don't know that I've ever heard that term, non-warrantable.
Yeah, it's I'll give you an example. Just did a property in Orange County, and 10 of the units at the top floor, there's 4 or 5 floors, the top floor, the balconies were about to freaking fall down and they cracks in them, right?
Wow.
So now there's litigation. You have the association suing the contractors who did it, right, for millions of dollars, right? So there's not a conventional company on the planet that's going to touch that property.
Gotcha.
Okay.
Okay.
All we had to do was identify it wasn't the subject property's balcony, right, which was also on the top floor, and we had to validate that the association had the funds in order to cover that cost if for some reason the lawsuit didn't go through, and they provided that for us, and we slammed the thing through.
Cool. Thank
Right.
you.
We also do foreign nationals. This is a big one. You got a lot of people from other countries who are looking to purchase properties here, but they don't have a legal citizenship. Right. So we'll do those. We treat them all as investment properties. It's a great product, popular product. We're getting a ton of those, especially in a place like this where you have so many transplants and people that have second homes here or investment properties here. And we don't care if they're going to live in it. We're still going to call it an investment property on the foreign national. The next one is non-TRID. Okay, so first off, you can charge up to 5% fees on the loan, right, which is huge. There's no CD. You can order the appraisal when you want. Typically on owner occupied properties, you have to wait until disclosures are sent out by the lender, by us, in order to order the appraisal. Okay, we don't care. You can order it whenever you want. Any fees that have to change, anything needs to be balanced, we do all that stuff on the fly, rather than the CFPB waiting periods, right, in order to redisclose fees. Basically what that means to you is it's faster. We don't care how many properties the borrower owns. You can have 100 properties that you own. You could have 99 loans on the 100 properties, but we will do 10 loans. We'll finance up to 10 of one borrower's properties, up to 4 million in aggregate. And if it's going to go over 4 million, just let us know so I can kind of size up the entire file and get that checked off before we start submitting those. We do lender credits up to 1%. It's an increase to the rate, so it just kind of depends on what your cash flow is. Maybe you're tight on cash flow for this property, and you want to credit closing costs or something like that. We'll allow that, and then as well as financed fees. So lenders or brokers need to make money, right? So sometimes you don't want to dump that cash up front. So we'll finance up to 2% of the broker compensation.
And you'll do that for investor properties too. So say we're buying a rental property and we want to keep as much cash in our pocket.
Yep.
You're willing to essentially say, hey, we'll cover the closing costs, we'll pay for title fees, whatever fees are going to come in, and then pay a little bit of a higher interest rate, and we all of a sudden don't have to pay any of those closing costs.
Right, and whatever the broker needs to charge, right, to earn their living, we'll finance up to 2% of those fees. So your payment will be based off the 2% added above your loan amount, but who cares? Your payment goes up $80 and you just saved $8,000, right? That's kind of the.
Y'all can pay me more.
I'll leave that between you guys.
Chris, did you cover what your actual loan to value ratio is?
I'm going to send you guys rate sheets.
Okay.
We start at 80%.
Okay.
Okay, 80% would be the maximum. We do cash out to 75.
Okay.
If you're going to finance fees, it would be at 75% would be the maximum loan to value.
Gotcha. Thanks.
Okay. And then it goes all the way down depending on your FICO. If you got a 600 FICO, then we're going to cap your LTV a little lower. I think you're at 70% on if you had a 600 FICO. We allow 1 times 30 on the mortgages. One of the great things about this product now is you get people with a bunch of properties, a lot of private properties. The only thing we're going to verify, or the only mortgages we're going to verify, are the subject property, if it's a refi, the primary residence, and any properties that are on credit. So a lot of these investors who have multiple properties, a lot of them are private mortgages, right? We don't want to go in and figure out what their payments are on these private mortgages. They don't really apply to these, to our guidelines. So we just leave them out. We don't even put them on the real estate owned or anything. We just act like they're not even freaking there, basically. So that, again, that makes it quicker for us to get the loan through the process, get it documented quickly, and not waste a lot of time, dragging documentation in from investors. Some of these guys are just really disorganized, and it can take you months to close, if you got 10 loans from them. So this makes that a lot easier. Another fun fact, cash out to satisfy reserve requirements. Typically, we'll have a 6-month requirement for reserves. But if you're taking cash out, that will satisfy it up to 75% LTV. At under 65, you don't need any reserves to close. Any questions after that? I know it's a lot, and I know you guys probably aren't used to hearing a lot of these terms and verbiage, but I think the base.
This group is probably more used to hearing a lot of that information. They're very.
Yeah, not me. As for me, all those terms.
And this is a product that if you're looking for somewhere, you're like, look, I'm going to buy this property and it's not something I want to keep. I'm going to turn right around and sell it in 3 months, right? We're probably not the company that you want to use. That sounds more like a private lender or hard money. If it's something that you're going to want to keep a year, because on these our starting prepayment penalty is 3 years, and you can go down to 1 year, either for a cost or an add to the rate. So you want to kind of figure out if it's a real short-term property, then we're not going to be the company, and most non-QM companies aren't going to be. You'll stick with your private money and hard money. But if it's something you're going to keep at least a year, then we're the people you want to deal with. It's going to keep your rate low, costs low, and that's so that's going to save you money over the first year. How long you keep it going?
I'm still here too. By the way, guys, I'm actually in this gym. I don't want the background for my phone to disrupt the actual meeting. But I wanted to add as well. Chris, did you want to tell them what our start rate is right now? Our floor rate on the actual DSCR?
Yeah, we're 3.99.
3.99.
That's our minimum interest rate.
Yeah.
That's pretty
so
good.
Pretty low for no income, right? It's
Absolutely.
Yeah.
Yeah, that was going to be my next question. So thank you, Jason, for jumping in, because that's huge. That is very competitive in the non-QM world.
Yeah, and we do pricing exceptions. We normally don't have to on this product, but if it's a bugaboo and somebody's just set on it, yeah, no problem. We just want to get the deal in and get it through. But we're pretty competitively priced, especially for our turn times. We're pretty much 48, 72 hours on everything, or 24 to 72. So once you compare that with other lenders like us, then that's usually enough to where people go, okay, I'm within an eighth, I'm just going to go with Home Express. Because most of them are taking 5, 6, 7. A couple of companies out there, and I don't want to beat any companies up, regardless who's on the call. We're taking 10 days, 2 weeks just to kick out an approval.
Yeah, and then how quickly can you typically close?
On these loans, I've closed them in 8 days. If you have an appraisal,
how fast do you want to close?
Yeah, there you go. How quickly can you get me all of the documentation, right?
Okay.
Yeah, and if it's something where you got an emergency, let Jason know, or let Eric and Chad know. They'll let Jason know, run up to me. Jason will say, look, I got to get this thing out. We got to close of escrow in 2 weeks. I need an approval out, in 48 hours. Point it out to me, and then I'll jam it up the system.
Yeah, and obviously in our market right now, I mean, people are just buying stuff and they're ignoring appraisals or waiving appraisals, I should say, and just want to get paid as fast as possible. So to be able to compete with almost a hard money loan, I mean, I've closed on hard money in 5 days. So 2 weeks, that's not bad. At least we're not looking at, 30 days on conventional. So that's good too.
Yeah, and it usually comes down to the documentation and the type of borrower. Somebody who just is completely disorganized, they're probably going to give up, right? Because they don't know where anything is. So maybe you shoot that person a private money quickly. Yeah, somebody who's organized and is ready and willing to has skin in the game and willing to participate and get this thing closed quickly, bring them on.
Marie, let me ask you, on your hard money lender, what's their max LTV that you're seeing on your investment properties?
Probably 65, right?
So we were at 80 pre-COVID, and then they pulled back a little bit.
Right.
So they were literally 80% of purchase price. They'd go up to 100% of the repair cost as well. But then they'd start charging more fees and stuff, and then you have to do the holdback, and that's kind of a pain in the butt for me. So what I typically do now is I just let them fund. They'll actually do, if I'm not doing repairs, they'll sometimes do up to 90% of purchase price. So then I'll just take a second, private loan to cover the cost of the repairs. So that's actually was going to be my next question was, do you guys allow second position liens?
Not on this product.
Not on this product, but we'll go up to 80% on a purchase. And I'm sure you're paying a lot of points on that hard money loan as well to get that loan done.
Well, it's more, yeah. I mean, they're not typically charging much in points. They'll have like a typical like 1,500 doc fee or something up front, but then, their interest rate is going to be like 10% or 12%. It's not going to be a 3.9, what I mean? So yeah. But that's good to know too. So no seconds, which I mean, makes sense for this type of product anyway.
Yeah, and a year is kind of our break-even point, so that's why we want to hold these to make sure we're not losing money. That's our time frame. But yeah, if you need to go down on a prepay, or if it's something you want to keep longer term, right? Especially now in the way the rental market's been, a lot of people are keeping properties long term. You can go to a higher prepay and reduce the rate as well.
Yeah, I mean, well, 3.99, you're competitive in the conventional financing at that point. The regular completely documented, all that.
Yeah. And you're going to start to see, and I don't think PRMG probably has start to see the effect yet, but as foreclosures start to pop up and these moratoriums end, you're going to start to see conventional hedge their risks with investment properties and also second homes.
Yeah.
Yeah, they've already started mandating that for the most part. So you're going to price that with a conventional lender, and it's going to say it's going to cost you 5 points.
So FHFA, which regulates Fannie Mae and Freddie Mac, has already made it so on our secondary markets, when we go in selling loans to Fannie Mae and Freddie Mac, we are only allowed to have up to 7% of our portfolio be second homes in that given month, which to our secondary department, trying to figure out how many of the loans that we've closed nationwide are second homes makes it, some days you'll have pricing for second homes at like right on par with the primary residence, and the very next day it could very well be like, oh, it's 6.5% paying 3 points. You're like, what just happened? So
that's where we come in.
Also, if I may add as well, Chris, I'm sorry if
Go ahead.
there's a lot of noise in the background. We will allow you guys to actually, your actual investor, funding in an LLC or a corporation as well. Very big. A lot of investment loans that I actually get through the system here. We have a lot of volume that comes through on this product because we hold the throne with this product. A lot of investors want to keep it in an LLC, corporation, or even vested in the trust. We will allow that.
As far as the down payment, right? So you go up to 80% loan to value. Is there seasoning, or I mean, in your documentation, are you looking for our last 3 months bank statements and stuff like that? Do you guys care where that money comes from?
We have 10 days seasoning for down payment and closing costs.
Okay.
And then 60 days seasoning for the reserves if the reserves are required.
Okay.
And it's 6 months would be the seasoning of, or the amount needed for the reserves. I would use that as a standard. And then if you're under 65, then there's no reserve requirement.
Okay.
Yeah, that's a good
LTV.
question. Yeah. Want to make sure you have that stuff up front. I deal with so many loans where, you're at the end and you're like, dude, right? The borrower's still putting funds in the bank and we're 2 days away from closing. And we're like, look, now we got to wait. I'm trying to get an exception, or we got to wait another 10 days for those $10,000 of $170,000 to season. So the better we can get at getting that stuff done up front, easier it's going to go through. We don't have to push back closings.
Okay.
you mean the money that's under my mattress doesn't work?
I had some guy had money in the Bahamas or Caribbean or something. He's, I just want to send it straight from there to escrow. I'm like, yeah, that's called money laundering, and I sent the legal, version of it. I'm like, you just can't do. He's, oh, well, I want to move that money to Canada. And then I'm like, whoa.
Just tell him to send it to escrow 10 days before close. It's
that's
fine.
but escrow wasn't, I don't think they were going to accept it from the Caribbean or something. I don't know. Yeah. So you'll have those out there, but for the most part, everybody's fairly good.
I'm half Italian and from New York. We got plenty of guys with money under the mattress.
Yeah. That's why we don't do loans in New York. Or not yet anyway. We're on our way there.
So that's a good question. What states do you loan in? Because we do get some people that jump in or watch these recordings that are not here in the Arizona area.
We are, where's my state? We're in 44 states.
Okay.
Yeah, there's actually 35 of them where we require a license, and then the other 9 we don't require a mortgage license or a broker license.
Okay. Yeah, but that's good to know too, because we have plenty of people here that although they live here, they invest in other places as well.
Yep. Yeah, we get a lot of that.
Yeah, like I'm in New Mexico. So that means that you do cover New Mexico by your map?
Yes. Yep.
I know, I'm like, why is New Mexico light blue and Arizona is
Yeah, it
dark
has
blue?
business purpose right here. So the light blue is business purpose, and this is consumer and business. So
Okay.
this is a state where you don't have to be licensed in to do a business purpose loan.
Okay.
So as long as you're not doing your primary residence, you're doing an investment property, you'll be good.
Exactly.
Gotcha. All right, so that's
And you
good
can't
for
do your
Billy.
own. Yeah, you don't want to be doing your own loan. That we try to stay away from that, just in case, just to avoid any kind of fraud.
Now, all the primary stuff too, especially in New Mexico. Me personally, I'm licensed in New Mexico, but PRMG, we're licensed in 48 states. So as far as like QM, actual conventional Gubby type loans, we can definitely help you out there as well.
In New Mexico. Okay. Got that, Billy?
Got it.
Yeah, the
Yeah.
landscape's changing quite a bit. So this is going to come up a lot more. So it's good that you're having these meetings early on in the market, because as those foreclosures come up, you guys are, I'm sure you guys already know you're going to get crazy busy.
Yeah. Now, does it make sense for us to like kind of get pre-approved with you guys, or since this is based on the property, there is really no pre-approval type of process?
Really the only thing we'd want to know is what's your FICO. Make sure you have some credit depth.
Okay.
And then whatever the last 12 months history is on wherever your mortgage is.
Okay.
Yeah, and just no bankruptcies in the last 48 months, stuff like that, foreclosures. I can't get around them. So if there's good enough reasons, good enough equity, stuff like that, then we can look for exceptions on those.
Okay.
And then if you ever want to get an idea of I'm sure you guys probably already have these tools, but one of the things I use to get an idea of the market rents, and I know a lot of people hate Zillow, but they're actually fairly spot on when it comes to regular market rents, not including any kind of short-term rental rents, right? So it'll give you a good
the rent
basis.
right, but not the value of the house.
Yeah, really. Yeah.
They figured that part out, but not the actual value.
Well, even the value's gotten better. I think since they got sued, it looked like it got better. And usually the value is just you have different data on square footage and stuff like that,
Well,
I think all those
let me
places
step
pretty
in on
much-
that one. Part of the reason that Zillow can't be accurate on something like purchase price or property prices compared to rental's easy. There's one thing to look at, and that's how much did all of these houses in this neighborhood rent for? Now we can do a rental analysis on what it's likely to rent for based on size and all of that kind of thing. So to come up with a rental analysis is a lot more of a basic number, where to come up with the actual value of a property is a lot. Do you want to see what it is? It is this giant appraisal book that I'm doing right now that is showing the market analysis, the actual comps, the details of the comps, what's the size. Like there's a lot more detail in the actual properties that we're compared to just, oh, this house sold in this neighborhood and it shows it at 1,500 square feet. So Zillow can't look at all of those details in a computer algorithm yet. Eric, don't talk about your system.
And you probably won't need to check it until if you're around 80%, that's probably where I would check it. Or you start getting into higher valued properties. Like I have one in LA, it's 4 units, 1.9 million. And the thing's actually cash flowing, but the first thing I wanted to do is go, okay, is this thing gonna even be close? Right. And it's really cash flowing, but just in case, your higher properties are 80% LTV, I'd be back checking the rents on it just to be safe. If it's close, we'll make it work. Right. If you're way off, let's get that figured out up front.
Like
Say it again?
What number do you consider higher properties? Is it general jumbo loan?
I would, well, it's going to depend on the area too. For example, if you're in a $600,000 property here in Arizona, I would consider that on the higher side. Because I don't know if your PITI is gonna be close to your rents, right? Maybe on a short-term rental, yes, but on market rents, it might not fly.
So Chris, could I technically use your non-QM product on a second home?
Yeah, we do second homes. It's on our owner occupied. It's on our
With
owner occupied
second
and
home-
second home product.
So for second home products, do you have distance requirements from your original residence? Like,
It
what
has to
is
make
it?
sense. Yeah, it has to
Can I
make
buy in
sense.
Prescott or Tucson?
As long as there's a legitimate reason, right? If you're buying, if you own a sweet house here and you're buying some dump in Tucson, right? We're probably going to question it's a second home. But if it's in the middle of the city with no view and no lake and no golf course, we might want a little more data on it. But I'll give you an example of a one property I did, and this is a primary residence more. Borrower's in a property condo in Pacific Palisades in LA. He wanted to buy the property next door as a primary residence for $1 million less. Right? There's no lender on the planet. Chad and Eric will back me up. No lender's going to buy that. Right? No way. Well, the guy's going to knock down the freaking wall, create one huge compound. He has 8 cars, and he only has a 4-car garage on his other property, right? The one he owns right now. And he needed the other 4-car garage as well. And the guy's got 6 kids, all under 21, right? So he's got all these cars. So we were able to get that with the explanation, get that bought as a primary residence. We just left out the fact the guy's going to knock down the freaking wall and make it a compound, you know. And
So if
I'm
I want
graded.
another house next door to escape my husband, you can do that.
Not as a second
for a
home.
friend.
Yeah.
I don't got one of those.
But yeah, that's something you'll want to run up to Jason, and then he'll run it up to me, and then I'll sit and brainstorm and go, okay, I'll pull up the property, I'll put up the satellite visual. Let's see what's around it. There's a golf course here. This makes sense. Or maybe somebody has kids who go to U of A, right? So I go visit my kids every so often or something like that. If there's a way to make sense of it, believe you me, like I said, I've seen about 20,000 loans. I'll figure it out.
So I've also heard of people being able to buy homes as owner occupied if they're purchasing for a family. So you mentioned, you've got kids at U of A. Well, what if I live in Phoenix, but my kid is going to school in Tempe? Can I buy a second home and allow my child to be there as long as I occupy it a certain amount of time of the year?
You don't need to occupy it if you're doing that. You can buy a primary residence for a dependent.
Got it.
Yeah, you're technically a non-occupying co-borrower.
Yeah.
Okay.
So, but you can buy it. It's in your name. You're the one financing it. Everything like that. You go strictly by owner-occupied rules for a conventional loan, and then so you can do that for a kid going to college. You can do that. Say you have a mother or a father or something like that, a parent that is dependent upon you. You can buy the house next door to you as an owner-occupied property. You put your parent in it.
Cool.
Okay, on this product, am I seeing that correct? You go up to 90% loan to value?
Owner occupied, we go up to 90%.
Okay.
Second homes, not 90%. We're at 80 on second homes.
It's 80 on second homes. Okay.
Now,
These rates are down to 2.99. That's our floor rate.
if I buy a home in Scottsdale with a pool and I want to use it as a vacation rental, but I'm only going to stay there a certain amount of time, does that count as owner occupied, or is that just a basic investor loan and it's all the same points and everything anyways?
Actually, our short-term rentals, we can put on a second home if you're going to stay there. So for example, if you're living in the property and then maybe you go somewhere else for part-time of the year and the rest of the year is rented short-term, then we can call it a second home. Or we can just do it on the investor and go with the market rents.
Yeah, so on the second home, is this still technically non-QM or do you need?
We're
This-
all non-QM, right?
this is all
It's still
non-QM.
non-QM.
So everything we do with Chris and Jason they are our non-QM.
Okay.
And then anything that's conventional or things like that will run through Eric.
So as long as my debt to cover, like, debt ratio is good, you'll loan it.
Yeah, and we'll address, like I said, that's why we close a high percentage is we'll look at all that stuff up front. We'll get your income calculated before Eric would submit the loan. We're gonna make sure all that stuff is dotted and crossed before we submit it.
So with Home Express, if you're doing a primary or a second home, that is going to have some income requirements to it. But we can get very creative with the way that we figure out the income, such as we can take your last 12 months bank statements, look at all the deposits that are going into that bank statement, and we can figure out income from there.
We have 15 different alternative income programs.
Yeah.
So rather than go through each one of them, we have a lot of ways of creating income.
No, I might just send you guys like my last year's tax returns and my bank
We
statement.
don't want
and be
tax
like,
returns.
"Tell-
Yeah, we don't want
Tell
tax
me how much I can rent, I can afford to buy.
Yeah, if you're self-employed, don't even bother with tax returns. Keep them in your box under your desk or whatever. Send us the bank statements because that's what we're going to be able to drive more income.
Okay.
We don't want to see the bank statements that said you wrote off $70,000 and everything. And,
Yeah.
that you made negative 65 grand last year. We don't want to see those.
No, I'll only show you the bank statements that have money in the accounts.
Or you
I
send the
won't
tax
show you the-
returns to Chad first and let him try to run you a conventional, and then if that doesn't fly, then go with the bank statements.
Gotcha. Okay.
Recent forbearances, here's just another income is the asset assist. So if you got 50 or say 500 grand in a bank account somewhere liquid, we'll divide that by 60. And as long as that figure per month doesn't exceed 50% of your base income, say your bank statement income, then we'll add it to your bank statement income. So if you're making $20,000 a month, you got 500 grand, we'll allow you to increase that 20,000 by $10,000 up to 30, just as an example.
Sweet.
People who have a bunch of assets, we do an asset express. If you can cover 125% of the loan amount, that's all you need. No job, nothing.
So I'm buying $1 million house and I have 1.2 million.
Golden.
Don't even look at it.
Nope.
All right.
We just want them seasoned. Those are seasoned for 6 months. Want to make sure it's not somebody that just went and got a loan somehow and can't pay
Buy
it
it
back.
from the Caribbean.
Yeah, just find out what accounts it's in, like 401ks. We'll accept 70% as a liquid amount, just to account for, taxes and stuff that are being paid on it.
Listen, my husband has a disability pension that is not taxed. It's the greatest income every year that we get.
And non-taxable, we can gross up 125%.
Yeah. That's what I try to explain to people sometimes. I'm like, well, it doesn't sound like much, but it's good because it's non-tax. And I get it until he dies. So no one kill my husband anytime soon, okay? We went to fill out our living will and trust, and I checked the box that said if they have your like health proxy and stuff, and it was like, if you're a vegetable, do you want to pull the plug? And I was like, not for him. He stays a vegetable until the kids graduate from college. I want that income.
Just keep him alive.
Keep him
The
alive.
125 gross up also applies to QM or conventional loans as well. And then also for FHA, we can actually go 115% gross up on a non-tax or the non-taxable income. So
Okay, cool.
that applies to both.
That's good to know.
Yeah,
All
just
right.
referral fees too, guys. Those are starting to become more prevalent as well. So a good way to maybe get somebody to throw you a bone here and there.
Wait, does anyone else on here have some questions for these guys? There's a bunch of like iPhone people that weren't actually showing faces, so I want to give everybody a chance to say hi.
Yeah, and if not, you can always run them up. Sometimes we'll think of stuff later. You know, run them up through Eric or Chad, and we'll make sure and get them answered for you guys.
Okay. Mia, what you got? You got any more questions pertaining to yourself or your clients' needs? You're muted.
I'm about ready to send them one of my new clients I just got that's going to need a bank statement loan. So I'm excited.
So that's something you can get a referral fee. If it's owner occupied, you can't. Sorry, has to be investment. My bad.
Well, I'll send you lots of investments. Just so y'all know, every single person in this group right here is my referral.
Well, there you go.
What?
I think Marie's the only one that doesn't count.
She called it. She called it first.
Exactly. I introduced Marie and Eric. So
True story.
Well, I will give you credit. You did go over and say hello to Eric and Chad before I did. I just kind of jumped in the middle of that conversation.
no, I drug you in when I was talking about Airbnbs.
Oh, that's true.
See? Credit.
That's because I need a few more. We're in the market right now.
I know, I'm looking.
More Airbnbs.
The only thing I will say on our side, on real estate side, is we're finally seeing things start to balance out. So now is probably a really good time to start going through the process of getting some of the rentals, or if you're wanting to purchase a rental, now is a good time. So using these types of loans will get you in with the still the low interest rate, because as the interest rate starts to go up, which I don't know if you guys have an opinion on where we're going to see interest rates go in the next 12 months as we try to balance the market a little bit.
Chad?
Anticipate them going up a lot or minimally.
Chris is like, I'm not even going to answer that. I'll just.
But there's two
Chad, what do
different
you
sides
think?
of it. You know, Chad's side and then our side. So that's why I was
Opinions.
pointing him first.
So rates, I think you're going to see, you will can see them starting to go up. Hold on, I want to put some on the screen here.
Oh, I let all participants share except Chad. I'm kidding.
This candlestick graph right here is the last 90 days of mortgage-backed securities. Red is rates. Rates are going up. Green is rates are improving. So over the past, month and a half here, you can see rates have actually gotten a little bit better from where they were. I don't think that is going to maintain. I think you will see them, but you'll see them go up slightly, but you're not going to be anything dramatic. So say you're at a 3% rate today, 6 months from now, I think you might be at like 3.25 to 3.5. So it's nothing that's going to be crazy.
No quick drastic changes.
It should stay fairly level. I mean, it'll creep up a little, but it's going to stay in line because we really don't know what's going to happen with a lot of these foreclosures that are going to be released. So there's going to be a game in there where everybody's kind of waiting, to make sure it remains stable.
Yeah, and then Mia, I mean, how do you see the market? I feel like the market here is starting to level out a little bit. Do you see prices, dropping if we do start to get all these foreclosures hitting the market?
I definitely think that the more properties that we get on the market, the better our market is going to be. Now, I did a training with Tina Tambone, who's a mathematical analyst on all of the market everything.
Tina, one of the Cromford report?
Yeah, with the Cromford report. So one of the things that she talked about and gave like very specific graphs on is that we're definitely not anticipating any type of a crash, but the next 9 to 12 months, we're going to see a little bit more of a balanced market. And what balanced really means is that we have the closer to the same amount of buyers as we do sellers. So right now we have 20 buyers to every seller. That's where our biggest struggle is coming in. So in order for us to balance, we need more houses to hit the market. We need more sellers out there to sell, which right now we're kind of seeing an influx and people panicking because we're at what is perceived to be the peak of the market, and everyone thinks that we're going to crash. So they want to sell while the market is good. So that's kind of where we're at right now, is people think that 2004 or 5 is going to happen. So we're getting more listings, which is kind of balancing it on a short term. But as we continue with that, the interest rates will start to increase a little bit. That's going to reduce the amount of buyers a little bit. And then the more sellers we get, then we just kind of hope to find that happy medium. It's still 9 to 12 months away if we continue on the same trajectory we're at right now, which of course we're never on the exact same. Many different things can affect that, but it'd be nice to see a little bit more of a balance. But I don't think it's going to be anything super crazy. I think these foreclosures hitting the market are going to help, but I think the biggest thing with foreclosures hitting the market now compared to what happened back in 08, 09 when foreclosures hit the market is now we have a crap ton of investors out there that are getting these foreclosures before they hit the open market. So it's not like your everyday Joe, like my old neighbor at my old house, she bought her house in 09 off of whatever for $20,000 because she could. She was just an everyday person who had $5,000 in her pocket and walked up and purchased a house. That's not going to be the case. Most of the people who are going to pick up all these foreclosures are going to be investors this time, which is going to make a difference, isn't going to make as much of a difference to our open market until all of you investors either flip or do something with them.
Now, do you think there's actually going to be a flood of foreclosures, or a lot of these people who are, because they all have equity in the property, more than likely,
The thing
are
is,
just gonna fire sell them?
we're already working on essentially trying to figure out who's in forbearance and how can we target them. Because somebody who's in forbearance, they don't want to lose their home. And we've lost where we were at, you know, a month ago where people felt secure. So if somebody did indeed go into forbearance, delay their mortgage for 3 to 6 months, whatever it was, and now still to this day cannot pay, they have equity in their home. So it shouldn't be hard for them to go to somebody like Marie and Liz, who are wholesalers, and for them to say, hey, save us. Like, save us from a foreclosure so that we can take the money you're going to give us and go buy another house right now and just avoid the entire process altogether. So I think that's going to be a lot more common because of investors, because of places like Open Door and OfferPad. They're going to come in and they're openly marketed investors. People are going to go, oh my gosh, I'm going to lose my house, and call these companies, and they'll decline because they won't let you.
You just said 2 evil words. You know that, right?
I
Never
know,
allowed to say OfferPad or Open Door again.
Open Door and OfferPad
calls.
will decline you if you're in forbearance. So we need to find ways to get on their list of who they decline.
I would be going after non-government backed loans. The government's going to issue up to 25% to assist people with mortgage payments. They're going to issue to servicers funds to modify and all that. And when you get into the private investor stuff, like stuff we deal with, we don't get any money from the government, right? And I handled our pool of loans when COVID hit. We had, I think 70 million or something. So I had to figure out how to dump all those loans. The only way we could do it is to make sure people were performing. So we just tell everybody no, because we have no forbearance program, no help from the government. So those are the people who aren't going to get help. Maybe I'll check with one of our investors to maybe we can get some lists or something for you guys.
Yeah, that would be great.
Ooh.
Yeah, Fannie Freddie loans, they're just going to do what they did in 08 and do like the HARP version.
Yep.
We're guessing it's going to be called CARP because they called it the CARES Act.
Yeah, I don't see a whole lot of foreclosures hitting, but I think the ones that do hit are going to be sucked up pretty quick by our favorite investors.
Yeah. It'll probably be a lot of investors where tenants aren't paying.
Mm-hmm. Yep.
Yeah, that's another list that I would love to be able to figure out how to get. How do I find the people who are, landlords that maybe they have 3, 4, 5 rental properties and they're not getting paid on those rents? Like, I want the mom and pop rental guy that will sell me their properties because they're not getting paid from their renter. So, all right, well, awesome. I really appreciate this. I don't know if anybody else has any questions. Gail, I know you can unmute even though you never show your face, but I know you do unmute and say hi. So if there you go. Say hi, buddy.
Hello.
Don't die on us. I know you're feeling under the weather.
Yeah, I'll live.
Do you got any questions for these guys?
No, it seemed pretty straightforward. Seemed like
I know you're always looking for second properties, rental properties.
yeah, actually I might be looking for another one to rent for myself. I might have a new job at Freeport. We'll see.
Oh, interesting.
So
Well, and congrats, I guess.
I might be an accountant there, so that's gonna pull me all the way over to Morenci, but oh well.
I don't even know where that is.
North of Safford.
Okay.
Middle of nowhere.
Your rental properties there.
A lot of my rentals are in Safford, yes.
Oh.
All right. Well, I'm glad you were able to join us and I hope you feel better.
Yeah, sorry I was late.
It's all right. Anybody else? Isidro, Yurik, Valid, do you guys have any questions about their stuff, their packages?
I don't have any questions right now, but I know that I will, and when I'm ready to go, I will reach out to these guys and definitely I'll be full of questions then. Thank you. Great info.
Eric, maybe you just want to throw your email up in the chat box for anybody that's joining, or do you want me to share your contact information?
Yeah, actually, I'm going to email you everything on all of us. That way it's all on one sheet, and then you can distribute it to your group there.
Are you going to do this? Are you going to do
for all of this? Eric is your point of contact.
Yeah, Eric.
Are you going to do this slide deck as well, Eric?
Yeah, sure, absolutely. Okay. Whatever information is pertinent. I might even include some family photos of myself and the kids.
Oh, cool. Maybe we can have you guys over for a picnic or something.
Right. So I heard that this was in person at one time. Is that on the calendar this year, or what are we looking at? So
we've had some, we've continued to at least do like property tours at people's properties that they're working on. So we try and continue that at least once a month. Unfortunately, the location that we used to meet at Tapestry on Central, which is a condo complex, that one of our members, we just had access to their community center. So we had a free place to meet every week, which was awesome. But because of COVID, they still haven't allowed their, renters to go back into using the community center. So now it's just a matter of, do we find a place? We've had some meetings at restaurants since this year started, but we haven't just found a place that we can consistently meet at every week.
In the conference room, you're welcome to use.
Where's your conference room?
59th Avenue in Bell.
My side of town.
You guys can see my
Eric's
screen.
in our conference room right now.
Oh, look at that.
I'm in here right now.
Sweet.
So. Can we bring margaritas?
Yes.
You have to bring margaritas. In fact, it's actually fine. It says must bring.
We have fun at our meetings that we have in that room. The last meeting we had was our monthly office meeting in there, and Eric missed it, but we had mimosas.
Oh, nice. Yeah, so our typical time is 6 to 8 on Wednesdays. So yeah, it's just been, we've had a couple of offers on random places, but it's been hard to find something that's like good spot in Central Phoenix. 59th and Bell. I guess.
And Mia, I know you said you were a whiskey girl. Mia, you said you were a whiskey girl?
Yeah.
There's 2 decanters in my office there.
Oh, see, I know where I'm gonna go.
No, but I'm sure Eric doesn't want to sit in the office with us every Wednesday either. So.
Are you kidding me? Let's do it twice a week, every Tuesday and Thursday. Let's go.
What? All right. Well, we might have to maybe we just add it on the rotation. Maybe it's once a month at PRMG.
We'd love to have you.
Okay, but only if you're providing the tequila. Chat.
Yes.
Sure.
No, he's got the whiskey, not tequila.
He's got the whiskey hiding in his office, but I don't share
Yes.
that.
Like
So
winners
you
cup
still have to
tequila,
have
right?
a Zoom though, because hey.
Oh,
We'll keep you in
Of
here.
course. Vali, we're
How
not
am
going
I
to do away
going
with
to
the
join
Zooms.
if I?
Hey, even
We're
when
not-
we were in person before, we had it on Facebook Live every week.
Yeah. So.
Any more
all right.
questions from you guys before I head out?
He's like, I'm
No.
done.
But they turned the air off in here like an hour ago, so I'm like,
Oh my gosh.
Wow.
yeah.
No, thank you so much, Chris. I really appreciate all the information from you and Jason.
Yeah, thanks for
Um,
having us. Any questions, run them up to Eric and we'll make sure and get them handled for you guys.
Yeah, no, that was awesome. Thank you.
All right. Thank you, everyone.
Feel free to jump
Appreciate
off.
it.
Thank
Thank
you.
you, Chris.
Thanks,
Um,
Marie.
Yes, thank you for being here. So yeah, we will definitely follow up with you guys. Chad, are you local? Are you Phoenix? Do you live here all the
Yes,
time?
I do.
Okay, you're year round in Phoenix. So it was just
Phoenix is
Jason
the
that was in
branch
California.
manager, or Chad is the branch manager, right?
So my title is area manager. I actually run
Area.
a couple offices across the
Okay.
state.
Sweet.
Oh.
I run
And
Tucson.
did I understand the other day that you were still looking to hire people? You need more loan
Always,
officers
I'm
or
always
something?
hiring people.
Wasn't
I
asking for-
interviewed 2 people today.
Marie just retired. She doesn't want another job.
This is true. I took early retirement with no pension. A small 401k. But it's okay. Real estate's paying the bills now.
There you go.
Amen.
So yes, seriously. Amen to that. Okay, on a personal note, guys, I am auditioning for the worship team at my church on Monday, so wish me luck.
Yay. When's practices?
It'll be fun. I asked them already and I told them I cannot do Wednesday practices and they said it's not going to be an issue, so it's fine.
But they won't tell you when.
They won't tell me when I'm going to rehearse with them, but they're just going to put me on stage on Sundays if if the audition goes well.
Well, good luck. As if you need it. You already got it and you know it. Okay, so fun fact about Marie, she sings opera.
Stop it. Okay,
And
prove it.
if you see her in person again, she will stop what she's doing and sing opera for you no matter where she's at.
Why doesn't she just do it now?
Amazing.
Preferably with good acoustics in the room. But yeah, I went to the High School Performing Arts in New York City. So literally the Fame school that the movie is based on, LaGuardia High School Performing Arts. So I took private voice lessons for several years and learned how to sing classical, opera, musical theater, all that stuff. I was actually in a jazz choir that sang at Carnegie Hall when I was in high school, and then was part of Pro Music Arizona, which is a group here locally for a few years. And we got invited to go sing at Carnegie Hall. So that was a lot of fun because I got to take my Arizona choir back to New York and visit all my friends, and had some of my old coworkers and stuff come hang out and watch me sing at Carnegie Hall.
Very cool. That's awesome.
Yeah, it's different, that's for sure. The singing part is kind of cool, and I'm like, I can sing along to everything, but when people hear opera, they're like, wait, what? I'm like, I know, I'm special. It's really loud. It's become a thing now, actually, at Fortune Builders, where they've gotten me on stage at boot camps. So there'll be like 2,000 people in the room, and they're like, Marie's going to come on stage and sing opera right now. So that's been fun. I almost got kicked out of a hotel one night. We were staying out late, and then they asked me to sing some opera, and the guy was like, the whole hotel can hear you right now.
Yeah, because there's no such thing as quiet opera, right? Like you don't it's not soft. Like that's
Not
projection.
soft. It's pretty loud. Anyway, all right, I'm gonna end the recording because